Hi guys, welcome to the 8th part of the market profile education series. In this part we continue with the confidence in profile section that we saw in part 6th. Now the reason uh, we didn't put this part as part 7 was because there are few market structure development concepts that we saw in part 7th which are going to be useful here. So again, our focus is the same. We are trying to analyze who is in control of the profile, and while doing that we are trying to establish what the trend is. Alright, so let's begin. Okay, now this is one common topic that comes up many times, especially for those who are starting out trading, is whether to trade on the short term or the long term. Let me put it this way, and my views can be biased because I'm not a short-term trader, but in my understanding from what I have learned, it is much easier to plan and run a marathon rather than run a 100-meter race. It's not that marathons are easy, but it's just that you get enough time to plan your resources, your energy. You can have a proper strategy in place, and basically the most important thing, time is on your side. And the same goes for long-term trading. In short-term trading, the time is a constraint, whereas if long-term trading, if it is done properly, time becomes your friend. Alright, so in case someone is inclined towards long-term trading, they need to understand that the foremost thing for gaining profits in long-term trading is trend determination. What the trend is. In my opinion, to the core, trading is simply knowing what the trend is. Once you know what the trend is, or once you find out a filter which can tell you what the trend is, then there can be numerous entry or exit methods that you can apply. It's mainly because counter trend give a lot of whipsaws. It eats away into your account. That is why a consistent approach in determining trend is very important. Alright. Again, in this section we are going to study 3 parameters. One is the auction rotation. This is something which hasn't been introduced in the past tutorials. Range extension you people are familiar with, but here we are seeing range extension in a slightly different manner. And price excesses. Price excesses is also something which has been introduced for the first time in this tutorial series. Now all these 3 parameters that we will study, it needs to be applied within the context of value area principles that we have discussed. By value area principles I mean whether value area is overlapping or it's trending, or what is the width of value area. Remember, when a profile is elongated, that means other time frame traders are in control. When the width is too wide, that means a lot of rotations are happening and the market is just in a range bound phase. So that is what we are basically interested in, that combining all these small concepts with the larger picture. Again, needless to say, all these concepts can be applied to day or positional trading depending on what preference you give. But the key remains how we take a look into where the value area is, how the profiles around are shaping up, and what's the width of the value area, and the volume aspect which we discussed in the last tutorial, the high volume node and the low volume node and its importance. Okay, so first is auction rotation. Now, auction rotation, it's more popularly called as rotation factor. It's just a numerical calculation we do based on how the price is moving to get a numerical confidence level indicator, you may term it. What we need to see is whether the rotation factor number is positive or negative. If the rotation factor number is negative, that means other time frame sellers are in control. If the rotational factor number is positive, that means the other time frame buyers are in control. Alright. Now in that also the magnitude is important. So let's say you get a rotation factor +1. It doesn't necessarily tell you that other time frame buyers are in control. You know, the number is just +1. On the other hand, if it's +5, +6, then you would know that yes, some strong other time frame traders are present. Similarly, if you get a rotation factor number as -1, that does not necessarily mean that OTF sellers are present. It just means that the balance or the fight between bulls and bears was tight, and in the end bears won marginally. Alright. One thing about rotation factor that I want to say is that you need to compute it across several profiles to know the trend, because in range bound market sometimes it happens that the rotation factor will be +5, gives you indication of buyers present, the next it will be -6 and giving indication of sellers present. So you need to smooth out to know the trend. Alright, so let's look at how it's calculated. Okay, so see, for simplifying the calculation, I've just included a bar chart here which has OHLC, open, high, low, close. Now whenever the current bar high is greater than the previous bar high, we have a +1. Similarly, when the current bar low is greater than the previous bar low, we have a +1. The same is with this case, so +1, +1. Similarly, this +1, +1. All these we have +1, +1. Now here we have a -1. Now why -1? Because the low of this bar is lower than that of the previous bar, so we give it a -1. So look here, look at this bar. The high of this bar is less than the high of this bar, so we give it a -1. Similarly, the low of this bar is less than the low of this bar, so we give it a -1. Okay, so the rules are basically here. Each bar is compared with the previous bar. Now if the low is greater than previous low, then we give it a +1. If high is greater than previous high, then we give it +1. If low is less than previous low, -1. If high is less than previous high, -1. If it's equal, we give it a 0. Okay. Like I said, positive numbers indicate other time frame buyer in control, whereas negative indicates other time frame seller. Okay. So again, the magnitude is important. If we have a rotation factor of +10, +15, we know that strong other time frame buyers are present. Similarly, the case goes for the sellers. Alright, so this was just the rotation factor. Now okay, I have computed it across trends. So now if you see this particular session, one day had a rotation factor of 14. This had a rotation factor of +2. Then again we got a 14 rotation factor, then -4. So see, here we get a -4 rotation factor, which is negative, but you gotta see what the previous trend is. The previous trend is clearly up. So the next day we get it as +10. So even if you enter it, let's say after an established trend, you do get a sizable amount of gain going forward. Okay. Again, this has to be used in conjunction with other methods that we have discussed. For example, with rotation factor, you got to see what is happening to the value area, whether the value area is moving high, or the concepts that we discussed previous time around about where the price is closing in the value area. What about the opening of the profile? Similarly, what about where are the high volume nodes, where are the low volume nodes? How will you structure or how will you read high rotation factor just near high volume node resistance? So these are the small things you got to look at. So if I'm having a good rotation factor number, positive rotation factor across 2-3 days, which has just about taken out a low volume node area, that would mean that the low volume area prices which were rejected earlier have now been accepted. So I get a further indication that the price is going to move up. Similarly, if I see the value area is also moving higher, I get more confidence. Okay, so this is how you gotta use it. Yeah, the next we come to range extension. Now I've discussed this topic multiple times, so I don't want to go into what range extension basically is, but I want to discuss about the behavior of range extension in two kind of markets. One is bracketed market, in other words range bound markets, and another is in trending markets. If you see range extensions happen in a random manner when the market is range bound. One day it will be up, one day it will be down, one day it will be on both sides, one day no range extension will be there, and this is what is depicted here. This is a typical range bound market. Now here we get a range extension means when the initial balance is extended. Okay, we get a range extension here, then we get it here down. We have a minor on the upside also. Here range extension, and we get to the upside. We also get a minor towards downside. But see, because more TPOs are present here, so we know it's on the upside. Here we get it on the downside, and here we do not get any range extension at all. Now this is a typical trait of a range bound market. If you take a look at a trending market, what you'll find is that most of the times range extension is happening in the direction of the trend, most of the times, and the magnitude is also important. Like it might be that in an uptrend downward extension might be there where a single or 2-3 TPO gets printed, but majority of time you do get a extension towards the upside. That's in an uptrend. So see, this is an uptrend. Look at all the range extensions that are happening. It's happening on the upside. One neutral day you get where range extension happen on both sides, but the general trend remains positive. If you look at the rotation factor also in this profile, in these series of profiles, I'm sure it's highly positive, because most of the times closing is happening towards the higher end of the profile. So again, this is how you're going to combine something like a rotation factor with higher moving value areas, with range extension on the upside. Look at the buying tails. In every this thing you're having buying tails. You just have a single buying tail here, again you have a buying tail here. This is not a selling tail, it is just that the profile was not fitting, so it has been cut at this level because the price had closed much higher. Okay, I hope you're getting the gist of it. The last part in this that we see is price excesses. Now price excesses is made usually around a swing top in the market, or a positional top in the market, or a positional bottom, or a positional swing kind of trade. What it means is that the previous trend remains. Let's say I'll talk in reference of an uptrend. So let's say a uptrend remains and the price continues to move forward. Then one day what you'll see is price makes an excess. It's something like a candle reversal patterns. If somebody has studied, it's like island reversal. Like the price continues to go up, suddenly you just have a blow off on the price, and the price trades one day in that blow off region. The second day immediately you see a reversal and the price starts coming down. It's like an island reversal. Okay, now what this is usually the end of the uptrend or a downtrend profile, and what it signifies is that the other time frame trader has entered so strongly in the market that he has changed the direction of the trend and is now driving it in the opposite direction. Okay, one more thing which is very important is that price excesses do not get breached easily. If you look at 2011 correction format, or 2008 correction also, but let us leave out 2008 correction because it's a bad example to give, as everything was so perfect. Take a correction of 2000 or 2001 also. Just see the number of times island reversal has come up, not the textbook pattern, but go by the concept. And those island reversals were not breached easily. I think there was one island reversal in 2002 which was breached in somewhere early in 2003, and then you saw a fantastic bull run happening. Similarly, if you even see the bottom formed in 2001 or 2008, it was a kind of island reversal concept. Take an example of January 2011 or March or April 2011, I'm not so sure. There was again an island reversal. So these price markers made by a price excess or an island reversal do not get breached easily, so it's a very strong support or resistance in the market. And price excesses need not be a one bar or a one candlestick concept. It can be a series of days giving a similar impression of a reversal, price excess. So see what we have here. Now, because of the width of the screen, I have not included the entire profile, but prior to this there was a nice uptrend. Now look what happened. The value area was stalling. You were 2 out of 3 profiles were closing towards the low. Then why this is an island reversal concept, not a pattern, because pattern usually it's a one bar or one day. Beyond the uptrend range, you see that the value gets accepted and the price trades. But when the reversal happens, look at where the market opens. It opens entirely below the range or the value that was previously accepted, and then market continues to drift down. Now this resistance that is defined here, it becomes extremely difficult to breach it. This is what price excess is, and the confidence that it narrates is that or exhibits is that the other time frame seller is so strongly present in this area that it would be very difficult for prices to claw back in this zone. Alright, and look at the strength of the downtrend. It closes near the low, almost in the bottom 25-30%, near the low. So these are strong signs that the other time frame seller is present in the market. Okay. Yeah. So see, I've mentioned here that the entire region is a price excess, not just a particular bar, and overlapping value area is suggesting stalling. So what you can see out here is a stage 3 playout. Remember the stages that I explained in the previous tutorial? This was the stage 3, and the stage 4 commences. This is the trend phase again. So this is distribution. So prior was accumulation, then trending phase, then this is distribution, and now again a downward price phase. Alright. Yeah. So basically, again, now with this, the confidence in profile section comes to an end. Now at this stage, what I will personally advise is to go through all the concepts once again, because the basic building blocks have been completed with this tutorial. From the next tutorial we are going to see the application. It's not that I haven't showed you the application. With every tutorial I've showed you the application, but it is just that there is so much of information that it's very difficult to know where to use which information and how to fit in the entire puzzle. Now for every trader, the final picture will be different. That means the way I organize my puzzle will be different from the way you do. So do not be skeptical about experimenting. You can use all the concepts that have been explained here and form your own little framework of market profile in order to see what is going on in the market. That is the best way to go about it. It's like designing your own system, with the concepts that you have understood. Try and make your own little framework to see how will you determine a trend, what are your observations in range bound markets, how can you use value area effectively, or what is the role of volume in your trading, these sort of things. There's one more thing that I want to tell, since we have covered all the basic blocks today. There are some things I haven't covered from the traditional market profile concepts. Something what Peter and Dalton have written about. It's primarily because their approach towards market profile was mainly for intraday trading, at least for Peter's case. Even Dalton, the amount of tutorials that and books I've just seen, it's basically intraday stuff. So some aspects I've definitely left out, and that is why once these tutorial series get over, I will strongly encourage you to go through books of market profile. There is no favorite book as such. There are limited resources, but definitely go through what the original authors have written. They obviously have explained things better because they are the ones who have brought this concept to us. But my whole idea of using market profile is just to know what is going on in the market, and it helps me making other decision based on kind of systems I have in place. Alright, so from again, just revise all the 8 tutorials, because from next tutorials, I think the next 2 tutorials are going to be about range bound markets and trending markets, and then we'll have some application stuff. Alright, see you guys until next time.